What is going on, guys? Today we're going to be talking about one of my favorite stocks in the stock market, and that is Google stock. We are going to take a look at Google's chart, where it's been in the past and where it is kind of looks like it might be going in the future. And then we are going to transition from there into the PE ratio. So its valuation is quite a bit lower than it's been over the past year, and that presents an interesting buying opportunity. And then we are going to look at Google's balance sheet. So Google has a very good balance sheet. We're going to take a look at their assets versus their current liabilities, where they're standing there. And we will end off the video by looking at YouTube specifically. So YouTube, Google actually owns YouTube, and YouTube, in my opinion, is one of Google's strongest growth vectors. They have a lot of potential in terms of their user base, expanding their user base, and also expanding their marketing base. And we're going to specifically take a look at YouTube versus TikTok. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. So let's start off this video by taking a look at Google's chart. So Google has a very poor chart, and honestly, they kind of just match the market. You know, Google is a large market cap. They have 1.4 almost trillion dollars in market cap, and we can see that they have been no different than the rest of the market. They have suffered quite a bit. So they are down over 27% year to date. And if we look at the last year, we can see that, you know, year to date, they were around 140 is where they ended the year at, 145. So they are even a little bit off their 52-week high of $152. So they're probably down around closer to 30% from their all-time high. And that, again, it presents a huge buying opportunity. We can see that the stock has kind of suffered a lot throughout the year, right? So we had the crash kind of back in here as a lot of inflation concerns kind of initially started coming up. And then the Ukraine-Russia situation came up. And then finally, earnings and things have kind of fallen through the floor for a lot of companies. And a lot of people have rushed to get out of the market. And then we've seen this kind of continued volatility throughout the market where we've had, you know, inflation. Is it going to be high? Is it going to come down? Is it going to keep going up? Where is everything standing at? So that's kind of what we've seen over the past year from Google stock. And with the stock price down almost 30%, we can see that the PE ratio, the forward PE ratio, is down as well. It was 31.15 as of a year ago. So June 30th of 2021, it was 31.15. And the current forward PE ratio is 17.45. So what we can do, and I've done this in previous videos, is we can actually take those numbers and proportionally calculate where the price would go if the PE ratio went all the way back up to 31.15. So all we have to do is take 105.87 multiplied by 31.15, and that gives us this number, 3,297. And if we divide that by 17.45, we get a potential price target. If the P ratio were to go all the way back up to 31, we would have a stock price of $188.99. So obviously that would be a huge return. That would be over an 80% return, almost a 90% return on Alphabet if the stock were to go all the way back to a P ratio of 31.15. This is where Google stock gets very interesting. Their current assets are sitting at $188 billion, which is absolutely insane when you think about it. So they are sitting on loads and loads of cash and cash equivalents, and their current liabilities are only sitting at $64 billion. So they have a 3-to-1 ratio, so 3 times as many assets as they do current liabilities. And what that presents is a very interesting opportunity for Google, right? As their stock has fallen, and a lot of these big companies do this, but they will buy back large portions of their shares. So they have plenty of cash to spend on buying back their shares, which will in turn lower their PE ratio on their stock and increase shareholder value, which is absolutely massive if you are an owner of Google stock, because all that will do is basically increase your ownership of Google stock, thus increasing the value of your shares and the stock price. The other huge benefit that this cash provides is security. The overall security security that, right, if the economy turns down and goes into a downward motion, if marketers are spending less dollars on Google ads, Google has plenty of cash to keep their business running, right? They can spend it on paying salaries, spend it on normal operations, whatever it may take to keep the business afloat as we kind of go through any sort of economic recession that may occur. Let's go ahead and jump into some of YouTube's numbers. And what we can see here is the number of users versus the year. And the last 3 years have been very interesting. We have seen almost a 15% growth in number of users year over year for YouTube. And as the number of users has grown, so has YouTube ad revenue. We can see here that in 2019, they had $15.1 billion in YouTube ad revenue. And in 2021, they got all the way up to $28.8 billion. And so far, what they're projecting for 2022 is to rise all the way up to around $34 billion in ad revenue. So this is absolutely insane numbers, insane growth coming out of YouTube, that they are growing by almost 30 to 50% year over year in terms of their ad revenue. Here I highlighted two very important statistics. So YouTube is used by 55% of marketers, which obviously is a good thing, right? A lot of marketers are coming into the market looking at YouTube as a great spot to display their products. And the second thing is, right, the biggest company in the world, Apple, was the biggest advertiser on YouTube in 2020. They spent $237.15 million on the platform. That is absolutely huge. That, again, Apple sees the value in using YouTube ads. So a lot of other marketers are seeing that same value, seeing the success of Apple and moving forward in a similar fashion. And YouTube is even gaining on the #1 social media platform in the world, which is Facebook. They are sitting at 2.562 billion active users, and Facebook is sitting at 2.91 billion active users. So this is absolutely insane that YouTube is getting closer and closer to passing, or at the very least catching up to Facebook. And what I want to point out is TikTok, because a lot of people talk about TikTok. I do own Facebook, and I also own Google stock. And TikTok is displayed as one of the biggest competitors of both of those companies. And what you see here is TikTok is only sitting at 1 billion users. So they are almost a third of Facebook and a little over half of, or a little less than half of what YouTube is actually sitting at in terms of their active monthly users. And more active users is extremely important for a business like Facebook, YouTube, TikTok, anything like that, because the more users you have that are actively on the platform on a monthly basis, that means there are more eyes watching content on your platform that marketers are wanting to market to, right? It's important that you have an audience to basically market your content to. And that is all Facebook and YouTube are, is, right? They're capturing the attention of a large user base and advertising to that user base other people's products and then making money off of those advertisements. So it's absolutely huge to compete for all these eyes and get as many people on your platform as possible. One thing I found very interesting is that YouTube's active user base is actually most concentrated in India. They have 467 million people using YouTube regularly in India, where the United States is only at 240 million active users, and then you have Indonesia, Brazil, and Russia following behind that. So overall, they have a large global reach, which is huge again for displaying products across a large audience, whether it's global or local to certain industries. And I wanted to end off this video with what I believe is the most important statistic I can show you when we're looking at the battle between TikTok and YouTube. And that is this highlighted in green right here. 81% of entire US adult population uses YouTube. So this is absolutely massive. When we think about the population that has the most amount of money to spend, that is the population that you want to market to. You don't want to market to someone who is not able or willing to buy your product. You need to market to people who are willing and able to buy your product. And that comes down to the adult population, right? People with credit cards, people with bank accounts that actually have money in their bank accounts. And what we can see here is, right, YouTube has a huge amount of their users, a huge amount of the adult population is using YouTube and active on there. So they have those eyes, that attention that marketers really like to target. And the difference is at TikTok, they have 80% of their audience is between the ages of 16 and 34. So they have a lot smaller or a lot larger population of TikTok is in that younger time frame. Maybe you have your first job, you just graduated, you're either going to high school or just graduated high school, and now maybe you're going to college. And that kind of puts you in this age range where you, again, don't have a lot of money. You're kind of the broke college kid or broke high school kid, and you don't have a lot of money to spend. So it's overall better to have a little bit older generation on your platform because they have more money to spend. In my opinion, I do love Google stock. I purchased it back in 2020. I got an amazing deal on it, kind of in the range that we're seeing here, kind of around March of 2020. And so far, I've actually been adding more shares. I believe that Google is at a low discounted price. I think it has a lot of potential going forward, and it still has a lot of growth in terms of YouTube and where that's going to be headed into the future. So again, this is just my opinion. Obviously, go in, make your own decisions, analyze the stock for yourself, and I'd love to hear what conclusion you come to down in the comments down below. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.